Hello, and welcome to the View from Sibos 2020 video series. This year, the conference is being held virtually. I'm Joy McKnight, Managing Editor of The Banker, and I'm joined via video link by Geoff Brady, who's Head of Global Trade and Supply Chain, Global Transaction Services at Bank of America. Thank you so much for joining me, Geoff.
Thank you, Joy. Delighted to be here.
So my first question is around the fact that, trade and supply chain finance has historically been very paper-based. How has the pandemic ramped up digitization and automation in this space? And another question is really, how has Bank of America's approach changed since the onset of the pandemic?
For trade, it's obviously, by definition, it's been a paper-based business for a long time. And I think the solutions have been there. I think the technology has been there. It really has been a question about, what was going to be the thing that kicked us into adoption. And again, I think it's not just an efficiency or a cost benefit question. And I think that really has sort of been the thing that generated that inertia. We think about parts of digitization, like remote capability. And when my technology teams over the last 18 months have come to me and say, okay, what do we think about remote capabilities for trade finance? The question was, well, I'm not sure it's super high priority because of the nature of it and because there's the paperish nature of it and the documents and whatever it might be. It's going to be a difficult thing to sort of be remote. And I think, companies sometimes were reluctant to give up the autonomy of, sort of that having that document in front of them, whether it be paper or whether it be sort of a version of that. So the remote capability wasn't super high on the list, but in the last 6, 7 months, boy, remote capability gets really important, doesn't it? So I think, from an industry perspective, I think it can capitalize on the momentum, on the inertia that we've seen in the prior, 2 years or so, as we think about, the blockchain consortiums, et cetera. And what we at Bank of America are doing, I mean, very much we're looking at from top to bottom, the GTS business and our global businesses. Where do we have paper business? Where do we have paper moving in and out? And let's put a timeline on it. When can we sort of eliminate paper and how quickly can we do that? And it's not just about cost, it's about efficiency, it's about resiliency, it's about ease of use. And I think something that all of our clients are on board with. So very much a part of the conversation now. I think it's been a part of the conversation the last few years, but very much a part of the conversation post-pandemic and COVID.
What is one thing that has changed in terms of how companies think about their supply chain and their suppliers base? How have banks been able to accommodate this change in their product and services?
I think the biggest change is probably for companies. It's a focus on sustainability. We've seen and heard a lot about the circular supply chains, wherein there are companies trying to eliminate waste. Most companies are looking to their ESG policies and saying, they want their suppliers to have certain elements of sustainability in what it is they do. And in many cases, it's not just about, for good order's sake. In many cases, it's, a top line question. They can't bid on projects without having a certain number of sustainable suppliers or diverse suppliers. So I think that's really been something that has been unique for the industry over the last couple of years, is companies have really focused on that element of it. And very recently here at Bank of America, we've issued what we call an Equality, Progress, and Sustainability Bond, and the proceeds of which are used to help communities of color very specifically. And one of the accepted uses of proceeds is supply chain finance and how we might be able to create that a different environment, more liquidity and more financing for diverse suppliers through our supply chain finance programs. So I think that is uniquely a sort of a new element for our corporate clients over the last couple of years, and one that I think is very important.
So I understand that Bank of America is involved in Marco Polo, a blockchain consortium. What are your thoughts on this solution, its merits, its benefits, and how do you see this progressing?
I talked a little bit about the last few years in the industry, and we've all sort of joined hands and realized that we need to be more digital. We need to be less paper-based. There needs to be some collaboration. Certain standards are going to be important if we are to really move the ball forward. in things like blockchain technology. And part of that is going to be the rules and how we're going to be able to set those rules and those guidelines to be able to do that diligence. And that's where uniquely when we're working with the consortium, we're able to do that as sort of a group and move as a group and make decisions as a group, which I think is important because that will make us ready for wider adoption. I've said many times, it's not going to work unless we all do it, right? Unless everyone does it. So you think about Marco Polo, what we've done is I think we've been able to guide Marco Polo in terms of what we think, our clients are really sort of looking for and what would be important to them and how to sort of make it more meaningful to them, make it more immediate to them. And I think, the blockchain technology has lots of possibilities. When we started that journey, it was really about, for us being able to allow for more unique and discrete connections between buyers and sellers. I've always said, trade finance is a brilliant use case for blockchain because of the different counterparties and being able to connect those counterparties so that you can pass information both securely and also data and also funds securely becomes very interesting. But what we've learned on the journey is to many clients, it's actually really interesting because it becomes a security question. When you think about, individual blockchain nodes that connect a buyer and a seller or a counterparty, for a company to be breached, for instance, in many cases, you'd have to breach each and every individual node rather than just make one data breach. So actually, as we've gone down this road, we've heard from a lot of clients that this is a security question for them, not just an efficiency question or an ease of use question. And we found that to be very interesting. And I think, again, it only dovetails with what we've all learned over the last 7 months in the pandemic, in that, we're trying to be not just digital, but also safe and secure and digital and provide ease of use, be remote, all those things. And I think that's the promise of Marco Polo.
Well, thank you so much for your insights, Geoff.